and all the rest of it. Right. What was that? Oh, you want me to? Okay, I can tease them in. It is at the end of day 2 as well, but there's some other things for the end of today as well. Today, if you stay, you get to come to the drinks. You had a banana, did you? Outside. Pete had a banana. Pete still had. Who had the donuts? I was actually slightly disappointed that the donuts weren't warmed up today. I was looking at that donut and I thought that donut just needed to be warmed up, and that would make my day, Ben. That would make my day a whole heap better to have a warm donut out there. All right, enough said about me and wandering on about the place. Tim Kennedy, are you ready to come up here and have a chat with everyone? All right, so this tall gentleman here was the chairman of Yandal. He's still the chairman. He's now also their managing director. And Yandal is exploring for Tier 1 gold deposits in strategic tenement holdings in 2 of WA's premier gold producing belts. It's a good story. It's had a bit of a backward step, but this fellow says there is more positive things to come. Would you please make him welcome, everyone? Tim Kennedy.
Thanks, everyone. I hope you had an enjoyable morning tea despite the cold donuts. Just to clarify, I was the chairman of Yandal Resources, but when our existing managing director, Laurie Hughes, stepped down, I took the opportunity to step in as the managing director. That was about 3 months ago. So the important thing, and I guess putting Yandal Resources into a nutshell, is we're a gold explorer with a lot of tenements in what we would call prolific gold producing belts. We're in known belts with multi-million ounce deposits. We're not out in the middle of nowhere looking for new places to go, although that's a really important thing to do, and I've done a lot of that in my career in the past. But we've chosen to go into belts with known deposits, with known pedigree, and to look for areas where past exploration, where the conventional wisdom is that exploration has actually been effective and there's no longer any more prospectivity there, and to look at those forensically and determine areas where the exploration actually has been ineffective. And a lot of the deposits were found back in the 80s and 90s in these belts. And as you would expect, a lot of exploration following the discovery of some of these big deposits like Jundee and Bronzewing. A lot of pattern drilling went on, a lot of set depth drilling, 20, 25, 30 metre drilling on grid patterns. And if no anomalous gold was discovered or identified, then people moved on to the next place. But the reality is of these belts is there's been a lot of deep weathering. There's been transported cover across the top. There've been paleo channels that have stripped off any residual gold. So the net effect is that a lot of these belts, a lot of areas within these big gold producing belts have not yet been effectively tested, and that's the opportunity for Yandal Resources. Just a quick one on the capital structure, 116 million shares on issue. It gives us a market cap of around about, I think we're 18 cents at the moment, so around about $20 million. Very, very strongly supportive share registry, notably DGO Gold, which is run by Ed Eschers. Ed Eschers actually is a very well-known, famous geologist in geological circles. He did a lot of the exploration and discovery in the belts that we're exploring back in the 90s. And he invested in Yandal because he liked what we were doing. He recognised the opportunity to have new discoveries where exploration's been ineffective. And that's why DGO became involved. Also, AU Xinggao is a Chinese private investment company, been in us for many years and very supportive. Great shareholder, have a number of funds and high net worth individuals. A small board, but very experienced. Myself got a technical background in geology, exploration, feasibility and discovery. I've been very fortunate to have been involved in a number of significant discoveries and teams that have had discoveries over my career. Greg Evans is in corporate finance background, M&A, strategy in the resources, and most recently a partner with KPMG. Very fortunate to have Greg come on the board. And Katina Law has got a commercial background, senior executive positions with small and large companies in the resources sector. So small but effective board. So where are our projects? Where are these wonderful multi-million ounce belts? You can see on the map there, starting from the south, we've got the Gordon's Gold Project, which is just 30 k's north of Kalgoorlie, north of Kanowna Belle, which is a very, very large ore body. And then further to the north in the Yandal Belt, we've got tenements situated between Jundee and Bronzewing, and also a small package of tenements just to the southwest of Bronzewing called Mount McClure. We've got around about 50 prospects over those 4 project areas that we're advancing through pretty aggressive drilling. We did around about 88,000 metres last year, which was pretty crazy for a junior company, but that's what you need to do, and particularly in these explored belts, is to get out there and do the deep, effective drilling. And we're advancing projects up that value triangle towards the resource definition feasibility. So the first one to kick us off is the Gordon's Gold Project. This is the one just out of Kalgoorlie. These are not just random tenements in the middle of nowhere. They are situated on the eastern flank of the Scotia-Kanowna Dome. I won't go into too much detail on that, but it's a geological feature that actually controls a lot of the gold mineralisation in the district. You've got greenstone belts rimming around the edges. On the western side, you've got Paddington, a plus million ounce ore body. That's the purple star. Hopefully it's big enough you can read that. The gold or the yellow dots are actually occurrences. So you've got one big deposit with lots of occurrences around about. On the nose of that Scotia-Kanowna granitic dome, you've got Kanowna Belle, again, one large deposit, lots and lots of occurrences around the edges. And our tenements are on the eastern limb of that structure. We've got the gold dots, lots and lots of occurrences, sniffs, and we're looking for the big one. There are operating mines in the district there, but we believe there's still very good potential to find a big one out there. So we're progressing at the moment 3 prospects on the Gordon's Gold Project. The Malone prospect, which is the westernmost of the 3 red circles. We've been getting some high-grade gold from early stage drilling there. We've most recently just finished an RC and diamond drilling program on that prospect, and we're just waiting for the results to come back in from that. Gordon's Dam, which is a small paleochannel hosted resource, which we are conducting a mineral resource estimate on that, but we're waiting on the results of nearby exploration at Malone before taking that through to completion. And also the Star of Gordon project, which is across to the eastern side there, where we're getting some very, very good results, including 10 metres at 8.4 grams per tonne. So quite encouraging there. Just to zoom in on these projects, we've got Star of Gordon on the left-hand side there. It's about 1.2 kilometres of very, very strong gold anomalism. Just pointing out the colour of those dots, and it's the same theme throughout the rest of the talk, is the purple is plus 6 grams per tonne. The red is 3 to 5. So 3 to 6. So yeah, just where you see the red and the purple dots, you know we've got high-grade gold. So it's 1.6 kilometres along there, immediately on our southern boundary on that left-hand prospect area, Star of Gordon. We've recently had some hits just north of an operating gold mine called the Gordon Sadar Gold Mine. So that's very encouraging as well. Moving across to Malone, where we've just finished some drilling, you can see we've done some drilling focused on that jog on or bend in the contact between felsic and mafic rocks, is often where you get gold concentrating. Very, very early stage drilling there, but we've had some strong encouragement, so more work to be done. If we move up into the Yandal Belt, before I launch into the Yandal, I should say that we've actually had exploration pretty much on hold there for the past 8 to 12 months until we negotiated an agreement with the native title holders, which we've done. We think that we've got a long-term strategy for that belt, so we wanted to set up good relationships with them early on in the piece. Negotiated that agreement. We've done our heritage surveys, and we'll be getting off drilling in the next 2 quarters. But this belt has got less than 2% outcrop and lots of opportunity for us to get in there and explore. Just on this map here, Barwidgee project, there's dual projects there. They're adjacent to each other, but it's an historical thing. You can see the faint grey dots are all drilling that's been done there in the past. And you could look at that and say, wow, that's been heavily explored, which it has. If you strip out all the holes that are less than 50 metres and not angled, it opens up the vast majority of that package there for new discoveries, because a lot of that drilling was ineffective. It was pattern drilling. A lot of it was very, very shallow. In fact, some of those holes didn't go more than 10 metres. But on a drilling map, it looks like it's been really strongly tested. The project that we're most concentrating at the moment on there is Sims Find, where we're getting some very, very good grades. That was the exploration we sort of closed off on last year, but we're hoping to get cracking again on that in the next quarter. High grades is what attracts us to the Sims Find prospect, 8 metres at 24 grams, etc. And that's just a zoom in of that same project area. The other target within this particular project that we're exploring in the next quarter will be the margins of that New England granite, where there has been some earlier exploration which highlighted some high-grade gold on the margins, but it's never really been explored systematically looking for that granite contact-related gold. So that's something we'll be doing next quarter as well. There are a bunch of other prospects there as well, but I just don't have the time to run you through those. The other project up in the Yandal is the Ironstone Well project, which is adjacent to the one you just saw. We're exploring an extensive regional shear there, where we've already developed a 268,000 ounce resource. We're hoping to extend that resource by doing drilling along strike. There's also potential underneath, and there's new prospects sort of off that main Barwidgee trend that are also prospective. Again, we'll be drilling that in the coming 2 quarters. So if you look at the Yandal belt as a whole, the areas that we've just recently cleared, heritage cleared with the native title holders shown in the red dots, they're the areas that have actually been cleared for drilling. So we'll be kicking off drilling in those areas shortly, once we receive the final report. We won't drill all of those holes at once immediately, but at least if we get some encouragement in the first pass, then we've got some backup positions to go to. So we're really excited about getting back out there after 8 to 12 months of not being able to explore. Now, just to finish off the Mount McClure project, this is a bit of a sleeper in our portfolio. The more we look at it, the more excited we are by it. Mount McClure is an old mining area. We are fortunate enough to have 3 of the old pits that were mined in granted mining leases. There was only about 100,000 ounces mined from Mount McClure when it was in operation. But the entire Mount McClure field, which extends it's about 17 kilometres north to south, is actually 1.8 million ounces. So it's actually quite a reasonable mining centre. The interesting thing about this, when it was mined, the gold price was $400 to $500. At the moment, obviously, we're around about the 2,600. So the economics are a lot different now than they were back then. Those pits are only taken down to 84 metres. If you have a look at the historic drilling, there's lots and lots of high-grade hits that have not been mined immediately beneath those pits. It's 2 minutes. So we're actually going back through that data now, and we're looking at it with a view to establishing mineral resource estimates immediately beneath the pits. There's also opportunity, good opportunity along strike from those pits to look for new positions with some deeper drilling and some earlier stage work that we've done. We've had some very good hits at what we're calling the Sulphur project, 11 metres at 2.6 grams per tonne. But if you look down on those bottom 3 gold boxes, they're some of the hits that exist beneath the pits yet to be mined. And there's an example beneath the Success pit. It's probably a little bit too small for you to see the detail there, but again, with the colour coding, with the purple and the red, they're high-grade hits. They're sitting beneath those pits. We've done some very, very broad stage initial step-down drilling, which are in those blue traces. And we've established that the mineral or mineralisation envelope extends at least 240 metres beneath those pits. On a broad scale, and the challenge for us is to look for the high-grade plunges in those deposits and see whether that extends to similar depths. So a great opportunity for us, we believe. And mineral resources immediately beneath the pits, high-grade shoots down plunge, and new discoveries along strike. So that's another project that we really want to get stuck into. So the investment opportunity for us is great projects in proven belts and lots of drilling coming up in the next 6 months. Thank you very much.
Tim, thank you very much. Just a reminder too that the reason I'm not talking straight after you finish is so we can cut it off and then you can go back and you can watch all of these pieces online a little bit later on if you'd like. And hello to our people who are watching online today as well. We're at the Marriott on the Gold Coast. And for those of you who don't know what the Marriott looks like, they've had a great refurbishment since we were here last. It was just beautiful coming in yesterday. But I did catch a little bit of a glimpse of it last night. There was a picture of Sonia Kruger, Sonia Kruger from Channel 7, sashaying her way through the lobby downstairs. So if you're at home and you want to think, well, what does the rest of this hotel look like besides what I'm seeing here on screen today? If you pop up the Sonia Kruger clip from the Logies, you'll get to see, just try and push her out the way because she just tries to hog the limelight a little bit. Janetta Owens is coming up to join us next. I'd say, yes, yep, she's going to come up here. She's not wearing the same outfit as the other one, thankfully for that. Now, Janetta is a geologist. She's the managing director of Godolphin Resources. Godolphin is into rare earths, copper and gold. They're an explorer. They're focused on rapidly advancing the Narrabri Rare Earth Project to become a one-stop shop for all the new green technology materials located within the Lachlan Fold Belt in central west New South Wales. Would you please make her welcome, everyone?
I can't see with my glasses on. I'm at that age where sometimes I need them, sometimes I don't. It's very confusing. Okay, so thank you for letting me speak today and introduce you to Godolphin Resources. Sorry, I wasn't pressing hard enough. Okay, so just the investment highlights to start off with. So Godolphin Resources is based in New South Wales. We have a very large tenement package. We do have gold and copper projects that we actively do explore, but most recently we did a joint venture with a rare earth project called Narrabri. And in that period of time, since we signed the joint venture back in March, we've actually moved forward with designing a 4,000 metre air core drill program and a 6-hole diamond drill program. So a bit of a corporate snapshot. I'm not going to go into much detail here, but just to note that, you know, obviously our share price, probably like everyone else, has taken a bit of a batting over the last few weeks, but we don't have a lot of shares on issue and we don't have any debt, which is fantastic. The cash in bank is okay, and our major shareholders really do hold their shares quite tightly, so we're a very low traded stock. So this is just a reason why Godolphin Resources decided to get into the rare earth space. As you know, or as I mentioned, we are a copper and gold explorer. We do have a project that also has zinc and lead, so that base metals. But, you know, there is a lot of talk, and we've heard about it this morning already, around the need for these products to feed into the EV cars, but also clean energy and different devices, whether it be medical devices or our little mobile phones, that not just require, you know, cobalt and lithium, but also other rare earths and rare metals. And we, where Godolphin's tenement package is located, let's move on. Here you'll see that the red package is our ground between Orange and Dubbo, and that is traditionally gold and copper and base metal exploration ground. But just to the north is the Australian Strategic Metals Dubbo Zirconia project, which is one of the largest rare earth and rare metal projects in New South Wales. Well, it is the largest one. And, you know, that's 7 kilometres off our tenement boundary. So for us, it was just a bit of a no-brainer to go, oh, hey, we're in the same area, we've got, you know, the potential for the same rocks. Do we have that potential within our own tenement package? So we did a data mining exercise, and that produced some results, not really what we wanted. So then we sort of stepped out again and went, is there something else inside New South Wales that might fit what we're looking for? And we came up with Narrabri, and it was actually a little bit of a interesting situation how that occurred. We were drilling at Gundagai, which is one of our gold projects, just around Christmas time, And we actually engaged with a local geologist from Gundagai, who happens to be a part of EX9, who is our joint venture parties. And he said, look, you know, we're a really small group and we actually need some help. We're looking for a partner. And we're like, whoa, we're looking for a project. Let's have a chat. And that's how it sort of turned out. So we looked at the data. We had a resource geologist that's really experienced in these types of rare earth deposits. It is a alkaline weathered granite product that enriches the actual rare earths and rare metals. And you know, all the numbers actually really stacked up. So we could see some good potential in what hadn't been done. So the previous explorers really, before our joint venture parties, was in around about 2000, 2010. And they did a bunch of drilling and they did some metallurgical test work and some mineralogical work, but they went into receivership in around 2013. So a lot of that data and the background to it has gone missing. So we need to do a bit of groundwork to actually say, yes, what was there is really there, and this is what it looks like. So just a bit of a picture. This is my first visit to the site. And as you can see, it was actually January in New South Wales and it was green, which is quite strange, but we've had a whole bunch of rain. So you probably know, with being close to Lismore, the east coast of Australia has been seeing a lot of rain. And these are lovely crop paddocks, which is really good for growing wheat and canola. But the practice of ploughing the paddocks and making it nice and fluffy so the roots get a nice good grip hold doesn't make it so good for driving drill rigs in there because they tend to sink. So as much as what it's a really easy access, I'm standing on a bitumen road. It's 12 kilometres from Temora. Actually driving into those paddocks at the moment to do our larger scale air core program is a bit of a problem, and we just can't do that until it dries up a little bit. So in the meantime, we're moving forward with our diamond drilling program, and that will give us mineralogy, some metallurgical baseline test work, as well as some assay results. So these types of deposits are actually quite rich in heavy rare earths, which are used in battery and also those making big things small technology. And I've listed a couple of the products there, like zirconium and yttrium. Hafnium is also very important. And two things that really stand out from Narrabri compared to ASM, which is what it traditionally gets compared to, is that we have gallium, which is a very important metal in semiconductors, and also lithium. And the ASM project doesn't have those two. So as much as what we are similar, we are actually different as well. Now, I mentioned we were pretty interested in how we could actually add value to this project. So this slide here just shows the drill holes that have been drilled, and it's got the highest grades of where they exist rare earth metals and rare earth elements. And pinks and purples and reds are actually really good. And you can see that that outline that looks a bit like a crescent, sort of, actually is what was defined as where the mineralisation envelope from the previous explorers. And you can quite easily see there in the west that we've got high-grade samples that actually sit outside that. So that's really encouraging. It means that not only do we know that there's mineralisation inside that envelope, it's actually highly likely to be bigger. This is the other slide that was quite encouraging. Again, pinks and purples and reds are the highest grades. Now, these drill holes actually finish in some of the highest grades, and they didn't hit bedrock. So the ore zone sits between the fresh rock and the surface, and underneath it wasn't tested. So all of that area along there is actually virtually untested. So the actual intervals of rare earths and rare metals could be extended. The other thing that happened here was the sampling. So back in the day, they actually composited their samples on 4-metre intervals. So every 4 metres was one assay. Now, these things can be anywhere between, you know, maybe 10 metres, maybe 2 metres in thickness. So for example, if you've got 1 metre at, say, let's just keep the numbers really simple and say it's 100 ppm, and then you sample that over 4 metres, you dilute it down to 25 ppm, it actually dilutes your grade. So they didn't actually do the best sampling for this type of deposit, which again, a lot of positive upside. So what are we going to do about it? Well, we're going to get in there and drill it when it dries up. So to start off with, diamond drilling program, and we will get the assays back relatively quickly on that one. With rare earths, you can actually see what you're getting with using a PXRF, so that's a portable XRF gun. We've arranged to hire one of those so that we can make sure that we're getting and seeing what we want to see, and then we'll send it off for mineralogy and metallurgical work. After that, as soon as it does dry up, and we're expecting that to be in around August, September, in the ground, doing our 4,000 metre air core program. And that is all we need to redefine this resource to a 2012 JORC compliant. So that is the key. That is what's going to tell us what really sits here and what it's contained within. Because of the process that you need for the assays for the rare earths and rare metals is slightly different to traditional gold and copper assays, we have been able to negotiate some reduced times in the assay labs. You probably heard they're very busy, but this takes a different method, which means that we can get to the end result a little bit quicker. That means that we can also get our JORC resource updated. So we're hoping, and we are hopeful and confident that by the end of the year, we will have that updated resource that we can put out to the market. So that's the Narrabri, that's our focus in the short term. So the Yeovil Copper and Gold project is actually a porphyry copper and gold project located in Yeovil, which is halfway between Parkes and Dubbo. So again, close to a regional centre. Now we have just drilled this recently. The pictures that I have there showing the copper mineralisation are actually from old drilling. And you can see it does have a mineral resource estimate already at that 12.8 million tonnes at 0.38 copper and 1.4 gold plus silver plus, plus moly. And I'd just like to point out that I don't know if you guys are familiar with the Boda discovery that's just been announced from Alkane, and they've put out a very large tonnage resource at 0.5 gram gold equivalent. Well, this actually is better grade than that deposit. We don't have millions of tonnes yet, but it's really, really underexplored and underdrilled. So what did we do just recently to try and upscale this project? We actually drilled 2 holes, one at Cyclops and one at Yeovil, and we stepped out a fair way. And the idea is it, 200 metres to the south, do we still see mineralisation? Do we still see it 400 metres to the north? And the answer was yes. This piece of core is actually from our first drill hole into the Cyclops prospect. And we intersected several very thick, that's chalcopyrite, which is a copper mineral, and magnetite. Now, that's fun in itself because it looks pretty and it's really nice and it's going to throw some good grades. But what's even more exciting is the fact that we've got chalcopyrite and magnetite in veins. Now, this is the same precursor that helped people find the Ridgeway gold project, which is a part of Cadia, which is one of the largest gold mines in Australia at a certain period in time. And our other major project is Lewis Ponds. Now, Lewis Ponds has been around for a while. It was mined historically for zinc and lead back in the 1880s and things. And most recently, we have basically turned it on its head, thinking about it from a different perspective. So we sort of knew that it was polymetallic, but by thinking about it as a gold project rather than a base metals project, it enabled Godolphin to actually take this project to the next level. So we knew that it's more gold rich in the north, and it's actually, gold poor in the south, but copper rich in the south. So in the last, 12 months since I've been involved with Godolphin, we've actually done some soil sampling to the north and aligned that with some of the VTEM work that was done previously. So Lewis Ponds itself has gold surface soil anomalies and negative VTEM anomalies, and we've been able to identify a few of those to the north. So that gives us encouragement that we can make this resource bigger. Now, this is a cross-section of one of the main lodes at Lewis Ponds. And you can see that to the north, which is this section here, the pink colours are the hottest colours, so that's the highest grade. And you can see they just stop. And the reason they stop is because there's no drilling further north than there. So it just, really makes sense that we've got these soil anomalies, we've got the negative VTEM anomalies, we've got a drill hole database that shows there's no drilling there, and that's where we need to go next. You can also see in the southern area, we've got a similar situation where we've got the pink high grade and it just stops. And again, there's just no drilling. So we really see that we can add value and add size and tonnes to this project relatively easily with a bunch of deep diamond drilling. The other thing that we did early on last year, early when I say early when I joined the company, was we actually defined and drilled a lode to the west of the two main lodes. And we identified again an additional lode here at Lewis Ponds. So that's fantastic. It means we need to do some future drilling, and we're probably going to get this to a size that we're ready to take it into a mining study. And we'll leave it there. Yeah. Okay. No worries. Thanks.
Would you put your hands together? And Janetta, thank you so much. I'm going to give you an 11 out of 10 for the presentation. Janetta started off by saying she needed to get her glasses and check things out because she couldn't see. And as she was speaking, I had Shane, our tech, up the back frantically trying to text me saying, you need to put your glasses on and check what the rundown is, because actually Janetta wasn't supposed to be up then. So she actually leapt up and did that presentation. Thank you so much, which of course caused a whole chain of events. And Gareth Solly from Black Cat has raced in here thinking that he's up next as well, but he's not, because the lovely Willem up the back there is going to stride confidently down to the front now and tell us about a project which may not just change your investment portfolio, it has the potential to do a lot of good as well for our world in general. Do you want to get on board with this? Do you want to support it? Do you see an upside for your investment potential? Well, they're expected to achieve a 5-fold increase in revenue this year following the commercial launch of a number of technologies that address global water shortages, remove and destroy persistent pollutants, and can recover valuable battery metals from secondary resources such as tailings. So will you put your hands together, please, and welcome Mr. Willem Vrensdorp, who's the Chief Executive Officer of TeQ Water.
Thank you, Chrissy. TeQ Water. Harder? TeQ Water, the name tells it, we are a technology company focused on water recovery and also metal recovery. Quick summary on our status. We demerged from Sunrise Energy Metals, that some of you might know. 8 million in cash as of the last quarter. Some of the top shareholders, again, given how much focus there has been on mining, Robert Friedland might be familiar to many of you. He's our biggest shareholder, huge supporter of water. Another big one in there is Fidelity, who after the merger was able to move the portfolio holdings from the person responsible for mining to a person responsible for sustainable investment. As a company, we're very much a company built on technology. We have 3 businesses. The left, our water technology solutions, is the mature area. Most of the people and most of our news flow is coming from that. In there, we have a number of very unique technologies that's tackling some of the major problems in the global water sector at the moment. That same technology platform is also can also be applied for metal recovery, and especially for metal recovery from tailings or from secondary resources, turning something that is now often a huge headache or a liability for mines into a potentially very valuable asset. That's an area where have quite a lot of focus on, but it's a bit under the surface at the moment. We're having a number of discussions with potential assets where we can apply our technology. In a way, Sunrise Energy Metals was an example of that. In the flow sheet of Sunrise is at its core in the processing refinery, our resin exchange technology. And then thirdly, a new developed membrane that we've been developing for the last 8 years. That's now almost ready for its commercial launch. It is, of course, linked to water technology in a very strong way. The difference is membranes, and for those of you who know water technology, membranes, it's a very large and probably the largest individual component you see across the world in water treatment. And graphene is a new material, a new platform to make membranes on. So we're very proud of that development and hope in the next year to start our field pilots across the world. So TeQ Water emerging leader in water technology. As I mentioned, an unrivaled technology portfolio. I will give you a few details in the next slide. Very strong momentum. So we demerged from Sunrise Energy Metals 11 months ago. And it was on the back of that first momentum, and we've only seen it increasing. We're very optimistic about the future, very, very strong pipeline on the back of our first plants that went live, that are operating right now. And then this upside. So given this is an investor conference, I frame this as an upside. It's a very important part of our business also, and the metal recovery and our graphene membranes. A little bit on technology. I'm obviously available later to talk in much more details. For those of you who know the water sector a little bit, you probably realize it's a very, very diversified sector. And in that sector, you have both relatively commoditized technologies, relatively commoditized plants. You could say that's the sort of the old-fashioned area of water treatment, but you also have much more advanced areas that are growing very, very quickly. And that's on the back of increasing concerns about water availability and increasing concerns about micropollutants. And for a proper treatment of those pollutants, you really need more advanced technologies, and we have developed those technologies over the last years. And that's really, one is ion exchange. The way we use it is actually very, very special. And the other one is encapsulated bacteria. That's another way of using bacteria to make them more effective. So strong momentum. We've been operating within Sunrise Energy Metals for quite a while, but really in 2017, we launched our portfolio of solutions aimed at some of those very persistent problems in the water sector. And on the back of that, we did our first project, very focused on mining. That's, I guess, logical, both from our background, from also our shareholders, but also because if there's one area where you see some of those very persistent and difficult to solve problems in water, it is the mining sector. So it fits very well with our technology. Our benefits become very apparent within that mining sector, also because we can do metal recovery. And then after we delivered those first operating plants, we built a commercial team, and we see the growth from that right now. On the right side, you see revenues, obviously starting from a small base, but growing very quickly, and us being very optimistic about being able to continue very high growth. So just to give a bit more flavor on what we're doing, 3 example projects of the last year. One is nutrient pollution. Nutrient pollution is a major problem, especially at lower and lower levels. High levels of nutrients you can address with traditional technologies, but when you want to go to really low levels, it's much harder. So you see that guy in China swimming in an area which is clearly polluted, meaning you get algae blooms. That's a problem not only in China, it's also, for example, a concern in Australia and many coastal areas where nutrient pollution is creating a lot of problems. We have a solution that is very suitable for that, to do that at low cost without secondary waste. Another example we're very proud of in the Northern Territories, in May, we signed a contract with PwC to provide better drinking water quality to local Aboriginal communities. A first project of a larger program, where our technology, again, is a very suitable solution for relatively challenging circumstances. In this case, it's uranium that's naturally occurring in the groundwater that is a hazard. And then third example, which I think is also a good example of the type of customers we attract. In this case, it's BP that also wants to create a much more sustainable oil operations. As many of you know, water is used in enhanced oil recovery, and our solution provides much more efficient use of the resources used here. So this then links to larger markets. So there's very, very large markets we focused on. It's not 100% we cover with our solutions, but it's a very substantial share of those markets. And these markets are typically looking at more advanced solutions to do a better job compared to what we've been doing, and also address recent health concerns, even with very low levels of pollutants in the water. Very strong outlook. The pipeline is always a bit hard to talk about because you can include a lot in it and you can include less in it. It is very, very healthy. It's also very healthy spread around our technologies. So although we have a technology platform that's built around resin exchange, on top of that platform, we've built solutions geared at specific problems, like the one I showed 2 slides back. All of these projects in our pipeline are all based on having had a discussion with the customer, having received their water quality, and having established a clear benefit from using our technology. That's no prediction of when this project will be converted into actual sales or the chance of success, but it is giving us a lot of confidence about our continued growth. Value upside. So I mentioned that before, we have the metal recovery. We are in initial discussions with a number of potential asset holders to indeed, as I mentioned at the start, turn a liability or an asset that's not being used for recovery into something that can be used for recovery. Our resin technology is very suitable for pulling out energy metals, so battery metals. On the right is just the ones that I can talk about because it's been officially announced as well. We're working with Sunrise, the company we demerged from. We worked with EnviroCopper with their in situ leach recovery for copper, where our technology would be a very good match, where we did initial testing. Ivanhoe Mines, we're obviously talking to them because our biggest shareholder is Robert Friedland, who's the owner of that. And then the second substantial upside I mentioned at the start are graphene membranes, a new membrane platform. And I think if you start looking into the water sector, perhaps you will see a lot of membrane companies, but you will notice there are only a very few that provide the original membranes themselves. So that's companies like DuPont or Koch Membranes. There's really a handful of companies that do that at scale, and that's the market we're targeting. So we're looking to have a new generation of membranes based on graphene. And after 8 years of development, we now, in the last year, have produced at commercial scale 1,000 meters of these membranes. And for the next year, we're looking at putting in pilots around the world, including Australia, where we can demonstrate the long-term performance of these membranes. And that's then the final step towards commercial sales. And this is a consumable from the start, means that the acceleration could be much quicker once you've been proven to be mature, because we would then become a supplier to other water companies or other trading companies, or indeed to a company like DuPont that has its own membrane portfolio. In summary then, so our company has grown very, very fast. We see a number of very strong trends that are supporting the ongoing growth. Trends many of you are familiar with, such as water availability, persistent micropollutants, and also the elimination of secondary waste. That's perhaps a little bit more hidden to the general public, but I would argue that's the single biggest problem in water treatment. The fact that almost every treatment technology creates very substantial amounts of secondary waste, which then creates secondary pollution and a lot of headaches. I think for mines, that's pretty well known, right? The tailings and the evaporation ponds that are less and less possible to be used, and therefore need solutions to eliminate them. Growth I mentioned, so we've seen very high growth, and we are targeting to continue that, and are confident we will be able to do it. Further acceleration is facilitated by the fact that we now have our first plans. The first projects are always the hardest, but we do see a lot of inbound demand from big companies saying that they need similar solutions to their problems. With more projects, we obviously get benefits of scale. We standardize our projects, we get consumables. So the resins are a consumable. The BioCleanse I mentioned at the start are the consumables, and our graphene membranes are from the start a consumable. And then finally, as a value upside, we are working hard to make our metal recovery business into a number of projects, and to make sure that our graphene membranes will be launched successfully and will then continue to grow.
Thank you very much, Philip. Very interesting opportunities to invest there and changing our environment. Really good stuff. Thank you so much. And thank you for your patience with me rushing you off like that. And with the glasses theme continues, one of us here has misplaced their tortoiseshell glasses, and they've been handed into Prue out the front desk. So if you're thinking, I have a problem, go and have a chat with Prue. All right, did you know? Here's a did you know. Did you know that the Egyptians revered black cats? You know, if a black cat runs in front of us, we all freak out a little bit. Well, if you're an ancient Egyptian, you would love a black cat because it was a symbol of good luck and wealth. And what could perhaps investing then, I thought to myself, in a mining producer would that name mean to you? Black Cat Syndicate. And this fellow up here, Not in black, sort of a dark blue though. Unfortunately, you haven't got the bond there, right? This is the Managing Director of the Black Cat Syndicate. It's Gareth Solly, and he's making his very first public presentation since the company's transformational agreement to acquire the Paulsens and Coyote gold operations from Northern Star Resources. So the company now has a 2 million ounce resource. They've started a 5-year journey to become a multi-operation 150,000 ounce producer, following the early steps of the likes of Northern Star and also Evolution Mining. Would you please make welcome Gareth?
Thank you, Kristen. And it is a mouthful, I know. Look, it's great to be here. It's a beautiful place you've got up here in Southern Queensland, and great venue. So we'll kick into it. We have just made those 2 acquisitions, and they do mean big things for the business, and I'll try and go through that with you in this presentation. So I'll start with a value proposition slide, just to wet the whistle. 70 million is roughly our market cap right now. We have released a feasibility study for our Cal East project, which we've been working on for a few years now, just outside of Kalgoorlie. That has more cash flow, so it well and truly supports our market cap. We can build a brand new mill outside of Kalgoorlie and produce cash flow. Paulsens operation has remnant mining opportunity, which alone would pay for the acquisition that we've made with Northern Star, and there's a lot of upside there. The Coyote operation, we already have a 5-year mine plan there. We've got a soft start on getting back into production through using stockpiles, which sit there on surface and a low cost to get up and running. And then, of course, there's heaps of blue sky in our projects. Finding another Paulsens, another 1 million ounce system, finding extensions, growing Coyote, and continuing our work at Cal East. So there's a lot of upside and a lot of value in this business that is not currently realised. As Chrissy said, 2 million ounces at 2.5 grams per tonne. Really good land holding. There's 3 key assets. Obviously, we've got number 1, Coyote up in the Tanami. 2 is Paulsens in the Pilbara and Ashburton, and of course our existing project Cal East outside of Kalgoorlie. 3 excellent locations for obviously making more gold discoveries and for producing. Now we've got a lot of infrastructure in the business. The 2 assets we've picked up from Northern Star have mills, have infrastructure, have camps. It's all there and installed, so it's low capital to get it back up and running. There's cash flow sitting there in the study that we've released for Cal East. We just need to build that mill, and it's not a great time to be building mills. Labour markets are pretty terrible out there. And the last point is that the directors have a fairly substantial holding. They've put a lot of their own money into this, and they do intend to make this work. I'll go through each of the different operations and talk about what we're doing and where the value is in those. So Coyote first, this last operated in 2013, produced around 35,000 ounces per annum over a sort of a 6-year period. There's a lot of value here because it does have a camp. It's the only camp in the area. It's the only mill in the Western Tanami. It's a long strike of the likes of the Cali deposits that Newmont have down in the Northern Territory. There's a 300,000 tonne per annum mill here, as I said, and a really good land holding, along with 500,000 ounces to get us going, and it's going to grow quickly. We've got a 5-year plan here to start on, and we're going to drill that, scope it out, and release information on that as we go through this year. So the rigs will be spinning here in the next couple of weeks, targeting in on the open pits and the undergrounds that will feed into that mine plan. So that's what it looks like in a very brief and schematic long section. The light grey areas are the existing resource that sits there. The dark grey areas in amongst that is the historic workings. We've got, in terms of our mine plan, we've got a 2-year open pit on the Speedy deposit, and then there's a 2-year underground at the moment on the Kavanagh, and that doesn't count any of the existing and historic areas, which obviously there's a lot of remnant resource that will come into the mine plan in time. So we're going to be drilling here soon. Obviously the plan is to extend and infill the resources to prove them up. In terms of the regional package, this is excellent, ground. There's a lot of other juniors in the area that are all exploring, hunting for the the big deposit that's a lookalike of the Cali. Coyote is pretty much that. They were looking for another Cali when they found Coyote. And we've got the right structures, we've got the right strat, and we've already got a lot of high grades on our lease package, which needs follow-up drilling. So we're doing geophysics here at the moment, and we'll be doing a lot more work and releasing information as we go forward. Paulsens, everyone's heard of Paulsens. It's the asset that started Northern Star, took them from an exploration company, gave them the cash flow and allowed them to leverage up and become a big producer like they are now. This operation last produced in 2017. It's got a very consistent production history, 75,000 ounces per annum at a fairly high 7+ gram head grade going through the mill. Really good infrastructure here. So 450,000 tonne per annum milling facility, associated camp and infrastructure. So similar to what we have at Coyote. And it's the only gold milling facility in the Ashburton. So again, strategically important for the area. Here, there's remnant mining opportunity here for sure. We could start producing and get cash flow out of this fairly quickly. However, we want to find another Paulsens or the extension of Paulsens. So our focus in the near term is going to be drilling to make those discoveries. This is what it looks like as a 3D view on the right-hand side. Red areas are either where there's already mining shapes or that need to be mined, or our target areas. You can probably see some numbers. Well, hopefully you can see some numbers on there. Out in the footwall, there's a lot of mineralisation that has not been ever targeted by mining. So metre at 236, metre at 67, et cetera, et cetera. So we'll be focused in on that to see if we can string a lot of those numbers together and look at a mining plan around that, because that hasn't been a focus going forward. They've always chased, the previous operators here have always chased the bigger, thicker loads. The other thing is the offset position. So when Northern Star picked this up, it was offset from the previous owners lost it, and Northern Star picked it up, found it, got back onto it, mined, and it's offset again at the bottom. The offset position has not been identified yet, and that remains a high priority for us. There's also repeat targets. So there's been money spent on the seismic surveys, and that shows that it's the right rock types, the right structures exist in and around the area, and some directly below and not far away. So we'll be drilling those as high priority targets as well to try and find another Paulsens. Again, regionally, it's in the right area. You've got the big regional structures that run down through Mount Olympus, down to Karlawinda, so big multi-million ounce deposits all along here. Any of the splays that come off, you're just looking for the right trap site. We've got plenty of that going on in this dome that we control a lot of. And there's other deposits here in the area. So we've got mining studies to do on those. We've also got follow-up drilling and extensional work to do on those. And then there's a lot of anomalous rock chips throughout the whole package. So Cal East is one of our mills that's sitting in Cal East, refurbed at the moment. What we've done here is this is where we IPO'd, so 80 square kilometres of land with no resource. 4 years later, it's 1.3 million ounces and about 800 square kilometres. So we've increased our land holdings substantially. This is pre-development. So we've got our study out that shows that there's a 5-year mine plan, mines 300,000 ounces and generates cash flow after building our own mill. At the moment, we're still active here, so we're still drilling. We're doing grade control at Myrie. That's going to be ready to get into production, and we're looking for potential for toll milling agreements, because right now, as I said earlier, it's just not the right time. There's not enough labour available around Kalgoorlie to go into construction. So we do have other options to get some cash flow out of this particular project, which is great. Here's a snapshot of the feasibility study. So it's about a 5-year mine plan, 56,000 ounces per annum on average, about $15.10 per ounce, all in sustaining, which is competitive, and I'll show that in a second. We've looked at only about 600,000 of the 1.3 million ounces in our resource base, so there's a lot more work that needs to go into this to find more value and add more mine life. And as I said, we're drilling, so this will continue to grow and it's on the shelf, ready to go, permitted to build the mill. So when the time's right and the construction environment's right, we'll be able to launch on this. In terms of that 1510, right now that's using current mining rates from contractors. It's competitive with where everyone else is at the moment as well. There's not too many places making a lot more money than that. In terms of the corporate summary, nice picture of core, it's stuck up there. 213 million shares on market. We've got a market cap as of close yesterday, about 70 million. So as I say, that there's a lot of value to be had there. We've got plenty of money in the bank as we raised for the acquisition, and we've raised enough to do a good chunk of damage with the drill bit. So that'll be happening over the next 6 months. Top holders have about 50%. Northern Star and Silver Lake are on the register with 4% each. And we've got some big American funds in there as well. The directors hold about 12%. Those directors are Paul Chapman, Les Davis, and you've probably heard their names already today, once or twice. So they're veterans of gold mining industry. We've got Tony Polglaze from Avanco Resources. He's the mill expert. And we've got Philip Crutchfield, who's their legal power and certainly a good businessman as well. One thing we've always done is be very active. That's led to the resource growth that we've got. So we started with nothing, lots of meters in the ground. Most of our money just goes back into the ground, and we've built up a good resource base. We've now got 2 new assets, haven't been drilled for years. We're sure we're going to add more value and more resource there. Once we looking for catalysts, if we can get some cash flow in this business, if we can start some operations, be it stockpile reprocessing at Coyote, or if it's toll treating at Myrie, and we can call ourselves a kind of a producer at that point, then maybe we get a re-rate off that. But certainly in terms of how many ounces we've got in the ground, in terms of the current market cap and EV of the company, we are undervalued compared to some of our peers. So what are we planning over the next 6 months? Lots of drilling, which is what I've said we do a lot of. Currently got rigs at Cal East, drilling around Myrie. They'll be drilling at Balagundy next month. We'll be drilling Coyote next month, and maybe even sooner. That will continue through the rest of the year, through at least the field season. It does rain up in Coyote later in the year. Paulsens will kick off around September, so getting an underground rig into that will happen around that point. And then there's lots of other exploration activities. So we've got geophysics happening. There'll be resource upgrades ongoing. And of course, we'll be releasing information on our restart studies on these projects. 2 minutes to recap, Chrissy. So we do plan to become a multi-operation gold mining business, let's say that. We are currently drilling high value targets. So, if we do hit Paulsens 2.0, that's going to change the share price dramatically. We do have very good infrastructure. So there's a heap of value in our business now with these mills that are owned and installed, and not many other junior companies have that at their disposal. So we do have options. We've got options. We can start 1, 2, or 3 operations in some sort of sequence, which we'll determine and release publicly over the coming months. So cash flow, that's important, especially for a junior. So we have a couple of different options for getting cash flow next year: stockpile reprocessing, Myrie toll treatment, just to name 2. And if we needed to, we could probably restart Paulsens at some point. So we have lots of options. We've got a very attractive valuation right now with the resource base that we've got and the infrastructure we've got. And of course, we've got a board and management team that have done this before. So if you'd like more information, please come and see me in the booth, and I'd be happy to disclose this in a bit more in detail about everything we're doing. Thank you very much.
Thank you, Garrisoli. Easy to find their ASX code as well. That's also built around good luck. It's BCH, so you've got the Chinese good luck, you've got the Egyptian good luck, and you need a little bit of it this year. But was that comment you made at the end there, something about Paulsens too? Is that a leading statement to us we should read more into there? Won't repeat it, will I? Because I might get in trouble. Okay. All right. Looking for something a little bit different now. If you're looking for something a little bit different, maybe green gold. looking to invest maybe in medical cannabis, look no further than little Green Pharma. So they are Australia's first and leading medicinal cannabis producer, trailblazing the industry, transforming the lives of thousands of patients worldwide. LGP is now set to dominate the European medicinal cannabis market. This is the founder and the CEO, Felicia Solomon, and she is here to explain more. Would you please make her very welcome, everyone?
Thank you, Chrissy. Is that on? Yes, great. Thank you, Chrissy, and thank you, everybody. My name is Fleeta, and I change people's lives for the better. I've had a history. My career has been spent changing people's lives, changing behaviours, and making their life better than it was before. I've been involved in mining where I had Safe Spine. It was an injury prevention and health and wellness program, which we sold in 2012 to the Sanitarium Group, so Weet-Bix. And I've had a couple of companies since then. And I continue to make a world of difference in people's lives. And there is nothing more enriching having a career where not only can you have a commercial opportunity, but you have a social impact opportunity. And this is why I love what I do. I love this company. I love this industry. And the most important thing of all is my people, my staff, my team, my family that have got us to where we have today because of their absolute passion and determination to get to where we are today. And so thank you for being here. I'm going to tell you my story, first of all, and that is I was introduced back in the beginning of 2017 to an 80-year-old man. His name is Bill, really special person. And Bill had a technology that could potentially provide or make the active ingredients in medicinal cannabis more available to the human body. I met with him one day on January 11th, 2017, and sat Margaret River region in Western Australia on a bench. And we noticed and we saw and we witnessed a 5-year-old child, her name is Claire, suffering from 70 seizures every single day from epilepsy. And she was getting more and more brain damage because she was completely resistant to any other treatment options available. The only thing that would help her was medicinal cannabis, and her seizures went from 0 to 4 every day. This isn't probably the first story that you've heard, but it was the story that changed my life. And I sat there on this park bench in Margaret River and said to Bill, what if we could grow cannabis plants here, turn them into a medicine and change other Australian lives? And that is when Little Green Pharma was born. And since then, we've come a long, long way and our vision has changed. Our vision has changed from just looking after Australian patients to changing the lives of thousands of people across the globe. And today we have 30,000 patients in Australia. We have patients in Germany, UK, Denmark, France, Italy, and it all started from Western Australia. So this is our story today, and thank you for listening. I can't have got here without the most amazing investor group. Our major investor is Miss Gina Reinhardt and Hancock Prospecting. So she's our cornerstone. And she has just got such an interest in wellness and particularly in clinical trials that she really does believe in this space. And I'm a larger shareholder as well. And so that helps in terms of my motivation because, of course, I want this business to do well. But we've also got Thorney Group in Australia, so a very well-known investment group out of Melbourne, and they're backing us as well. So we've got some amazing support there. The corporate structure or the corporate slide today, a little bit outdated from a few weeks, but I think the share price is about 27 cents or 65 million today. And what is interesting is that no longer, are we just producing in Australia, but we have also acquired a facility in Denmark over in Europe. And we not only lead the Australian medicinal cannabis industry, we were the first to produce locally grown medicine, we continue to lead the way, but now remarkably, we are set to dominate Europe. We've got our claws in all these emerging countries, and it's so exciting to see our progress there. Our business model is that we're vertically integrated. So this means we operate across the entire supply chain. When this business was formed, it was an unnavigated pathway. You know, I had to work with the TGA and the government to actually create the permit systems and see how medicinal cannabis would work after it was legalised in 2016. So we cultivate our own cannabis plants. We have a facility in Western Australia. It's indoor. And we've also got a huge facility over in Denmark, which we purchased just over a year ago. So we were break even in Australia, and then we purchased and acquired the Danish facility. So we know what we need to do to get to break even on that facility, and we're well on our way to doing that. That particular facility in Denmark, which I'll show you in a moment, can produce more than 30 tonne of raw biomass of cannabis material. So we also do the manufacturing ourselves, and we also supply not only flower and oil cannabis medicines that's being used right now from patients in Australia, but we're also working towards the longer-term R&D clinical trials so that we can potentially register a product and then have that protected. We have a fabulous patient access and education team who, you know, they work so hard just to teach our doctors, because this was a prohibited substance not long ago. And even today, people hear of saying, is cannabis legal? For medicinal, yes, it is. There are 130,000 patients roughly in Australia who are benefiting from this medicine. And of course, our sales distribution, which is so important. It's our end game. It's where we want to be, and that is across the world. Our growth strategy has never changed. The first thing we want to do is capture patient acquisition. We want to dominate in Australia and Denmark because that's where we operate. And it also provides a great sort of blueprint for the new countries that we enter. The second and the biggest focus right now is a laser focus on commercial sales volumes in the international space, because this is where we will make the profits. This is the return on investment. We're not going to do that in Australia. There's only 25 million people here. But in Europe, in the countries just that we're playing in, there's 330 to 350 million people. And we're working longer term on product and drug delivery innovation. I'll just touch very quickly on our sales. In 2020, we finished with 2.2 million in revenue. Financial year 21, we had a huge increase up to 7 million. And then the 9 months up to this March has been 10.5 million, so a 50% increase. So we're really wrapped with our sales. These are just increasing, and the best is yet to come. So let's just have a little look at our facilities. This is in Denmark. This is 11 greenhouses we have at this facility. Oh, sorry, we've gone back to Australia. So this is our indoor. This can produce 3 tonne of biomass every year, and it's getting distributed across Australia, but also into other countries such as Germany and the UK. It's almost like a hospital feel. Seeing is believing. This is our Danish facility. It can produce over 30 tonne of beautiful raw biomass that goes into making medicines that our patients use across the globe. Is a huge manufacturing facility, and again, it's like a hospital grade. So don't think this is just a weed that you grow out the back and you hope or you smoke and you do whatever you want with it. This is a pharmaceutical grade facility. And what we have is something really special. It's called GMP, Good Manufacturing Practice. And it's recognised by the EU. So we're one of the few companies in the world that has EU GMP to be able to sell into Europe. So we've got a good head start there. Some images of our laboratory. So I just want you to get a feel for what goes into making this medicine. And finally, just a snapshot of what our products actually look like that we have at the moment. At the top, we've got our oils, which are 50 ml bottles. So these are prescribed by any doctor, and our flower medicines. Now, this is where I'm going to spend most of my time right now, is how we're going to dominate Europe. And this is what's really cool. Because of that EU GMP, and there's only a handful of companies around the world that have that certification, this particular market has a high barrier to entry, and this is why we like it. So not even the North Americans or Canada, who are probably 10 to 20 years advanced and ahead of us in terms of cannabis or medicinal, they don't necessarily have this license, and it costs millions of dollars, a few years, and the knowledge which you just can't buy. So where we are at the moment, when you look at the green, we're selling into Germany and the UK, we're selling into Italy. Italy is important because we're only the second company to ever be able to sell in Italy, and that's run through a government tender. So Italy is just opening up and we're right there, so we're so excited. Germany, very saturated market at the moment, probably one of the biggest. Looks like it's going recreational next year, but we actually white label our medicines for Germany, and we're working with 2 of the 3 largest distributors. So we'll get a good chunk of market share in Germany and the UK as well. We've signed some pretty big deals in terms of these 3 countries, and we're committed, or we've got sales agreements up to 35 million over the next couple of years. And so with those, you know, we know what we need to break even. We know what we need to make to break even from the Danish facility. And with these, we're really comfortable with where we're at. I will just highlight France and Poland. These 2 are very exciting markets. France, we are the primary supplier. We have 60% of a government-led medicinal cannabis trial. Now, what this means, we've got nearly somewhere between 2,000 and 3,000 patients. We've sent nearly 30,000 bottles of medicine, but we haven't recognised this as revenue. We've recognised it as R&D, because we're supplying that to the government to do their study so we can prove to these countries that medicinal cannabis is safe and it has a role to play in the medical field. And that's looking to legalise for medicinal purposes in the next year or 2. We have first mover advantage. We have the brand there. So we are very much poised to enter that market and turn the R&D, which is worth about €8 million, into sales. So as you can see, a little bit different to the Australian population, which is 25 million. Of course, we have 20% market share here, but we'll be looking to dominate and get market share up in and around the European continent. And then really, look, just to finish up, we've got an R&D pipeline. I'm not going to talk too much about them, but I just need you to understand that studies are so important. We've just published a peer-reviewed article in one of the journals on one of our cannabis oils in relation to pain. It was chronic refractory pain, exceptional results. We have a worldwide, in fact, it's the world's largest medicinal cannabis study that's being done at the moment with 3,000 patients right here in Australia. And again, it's to give our doctors that real world evidence and education about medicinal cannabis. So look, on the news flow, this is what to look out for. This is what we've got coming up, and we're known to deliver on our milestones. So it's anything to do with new distribution pathways into Europe. So keep a lookout for those types of announcements. And look, these are my details, and please come and see us. Look, it's such an undervalued company in terms of we've been following the cannabis stocks, probably not judged on our company fundamentals, but with the solid pipeline that we have in front of us, we just couldn't be happier, and we'll continue to be the larger company, one of the largest brands in Australia. So we're at the back. Please come and say good day, and we can tell you more about it. And thank you so much for being here. If anyone ever gets to Margaret River, come and visit us, because seeing is believing, and this is an extraordinary industry. So thank you for your time. Thanks, Chrissy.
Thank you so much. But I actually have the opportunity to come to our conference in October, and you can come to Southwest Connect, then you can go and you could visit Fleeta and see the operation for yourself. She's slightly passionate about that one, isn't she? Do you think? Yes. Neurotech International, we're staying with the medical scientific side now. Neurotech International CEO, Dr. Alexandra Andrews, is joining us on stage now. Neurotech is a biopharmaceutical company focused on the development and the commercialization of neurological solutions that improve quality of life. And the company's current focus is their world-first study, which is looking at the treatment for pediatric autism spectrum disorder. 1 in 44 children, if you believe the statistics, 1 in 44 to 1 in 100, isn't it? Children have autism. We have 2 children in my larger family that have autism. So studies like this and developments like you're making hold great interest for myself. I know for many of you as well. And again, let's see what it could mean for our investment portfolio. Would you like one of these too?
Thanks, Chrissy. It's a pleasure to be here, and thank you to Vertical Events for putting on this wonderful conference once again. So I will quickly just give you a little background about myself. I completed a Bachelor of Biomedical Science, followed by a PhD in neuroscience. And in my PhD, I was looking at the effects of fish oil on kids' brain development. So just to give you an idea, that's my background, and that's how I'm very interested and passionate about children's brain development. And here we are with a extremely exciting product and an ability to change the world. So with that, let's go into the next slide. Do I have a clicker? Okay. So Neurotech is a biopharmaceutical company developing and commercializing proprietary strains of medicinal cannabis to treat all neurological disorders. But currently, we are first and foremostly working on autism spectrum disorder. We've conducted some extensive preclinical research that's shown that our strains of medicinal cannabis are able to significantly reduce neuroinflammation. And neuroinflammation is essentially the root of all evil in the brain. So anything that's able to reduce that is we're onto something. We've also completed the world's first trial that's looked at kids with autism using a whole plant medicinal cannabis product that naturally contains really high properties of CBDA, CBG, CBN, and other minor cannabinoids. It's not just another CBD or THC product. In fact, our product naturally contains less than 0.3% THC. And THC, if you don't already know, is the component of the cannabis plant that gives you the high. It's the psychotic kind of component of the product. So the fact that we've got naturally very low THC is a huge positive, because it means you can drive a car, send your kids to school without having those sorts of properties. We've lodged patents in all major markets. And as I mentioned, we've got potential to use NTI 164, which is our lead candidate, for multiple neurological disorders beyond just ASD, or autism spectrum disorder. That's the acronym. Our capital structure. So our share price is around 6 cents, market cap of around 40 mil. We've got 2.3 mil cash in the bank. We'll be getting our R&D rebate in August, September. We've got 696 million shares on issue, and yeah, we are well priced for growth. Our board and management team are all highly experienced. Our chairman, Brian Leedman, has got more than 15 years experience in the biotech sector. He's here in the audience today, and I'm sure he'd be happy to answer any of your questions. Come and see us at the booth. Krista Bates, she is a lawyer. She was ex-Lavin Legal, where she was headed up the medicinal cannabis group. Professor Alan Cripps, AO, a highly distinguished professor, academic scientist. Mark Davies and Winton Willisey, they have both got extensive backgrounds in business and capital markets. So what makes NTI 164 so different to the competitors out there? Well, every other company that you would have heard of with medicinal cannabis is either developing a CBD product or a CBD and THC product. But that's not what we're about. Our product, NTI 164, has got really high levels of minor cannabinoids, and these are rarer. So that's what I'm talking about, CBDA and CBG. These are rarer minor cannabinoids. Because it's a whole plant product, it also contains things called terpenes and flavonoids that are part of the natural plant. And these ingredients work together with the minor cannabinoids to create an effect that is greater than the sum of its parts. The research out of the Lambert Initiative at Sydney University has been calling this the entourage effect, really showing you that the ability for the plant to work as a whole is more powerful than if you were just to extract the CBD or just the THC. It works better as a whole. We've got strong patents that were lodged in October last year, and they have the potential to combine NTI 164 with other off-label, off-patent blockbuster drugs. Our preclinical evidence has really highlighted the ability for NTI 164 to reduce neuroinflammation. And as I mentioned before, that is really key. We've shown that NTI 164, when compared to CBD alone, significantly reduced neuromarkers linked to multiple sclerosis. It also worked to increase cell viability, increasing mitochondrial activity. And all these things really demonstrate and point to show that it's working through multiple modes of action as opposed to just working through one single pathway like a CBD product would. I'll talk about autism now because that is our primary indication. As Chrissy said, it affects 1 in 44 kids, which is 1 in every classroom. Symptoms of autism, I'm sure you know someone with it. You know, they've got problems with communication, problems with behaviour, aggression, often repetitive body movements. And currently, the treatment options available to these kids are pretty limited. The only FDA-approved drug is called risperidone, and that's an antipsychotic that's got some very nasty side effects, foremostly weight gain and breast growth in little boys and girls. Also digestive issues and a host of other things. So that's not ideal. Ritulin's often prescribed as well to kids with ASD, and that's got side effects like anxiety and problems sleeping. So parents are faced with the difficult decision of to either keep their kids on the medications or to take them off. And what we do know about NTI 164 and medicinal cannabis is it's incredibly safe. We released our safety results last month, and I'll update you on the next slide a bit more about the trial and how that played out. So our phase 1/2 program, we have completed our trial through the Monash Children's Hospital. The lead investigator is Professor Michael Fay. He's the head of paediatric neurology at Monash, and he's been wonderful in terms of helping to recruit all these kids and putting all the data together right now. To give you a brief overview of how the trial went down, we had 20 kids with moderate to severe autism who were recruited and put onto this NTI 164. The primary outcome was to look at the safety, and as I said, that was it's very safe. The results have been released. No adverse events or toxicity was noted, so that's a positive. And although I don't have the results of the efficacy to share with you yet, I can tell you that the parents of this trial have actually gone to the ethics committee at Monash and said to them, we don't want to take our kids off this medication. So that's meant that we've been instructed by Monash Children's Hospital's ethics committee that we need to amend our protocol and allow these kids to stay on the medication. We see that as being very encouraging, and I've never seen that before in my career. So ASD, or autism, is a huge market. It's 2.3 billion here. I mean, we've also got the ability to look at its other incredibly large market areas of indication, including multiple sclerosis, cerebral palsy, ADHD, migraine, and traumatic brain injury. In addition, we're also looking at combination therapies, which will be combining our drug with other active pharmaceutical ingredients. Our patent position, we've lodged it in October last year, and we completed our international prior art search earlier than necessary because we wanted to make sure that there was no one else out there doing what we are doing before we started to invest a lot of money into doing a clinical trial. It was very important for us to know that we were very unique, and that I can safely say we are the only ones doing this. We've got patents over the composition of matter and also patents around the combination of therapies. Our pathway to commercialisation, we are most focused on the FDA and developing this as a pharmaceutical drug. We see this as having a massive potential upside. We just looked at the example of Green Pharma, who was acquired by Jazz Pharmaceuticals late last year for $7.2 billion cash. And if we can use that as an example of what we can aspire to, that's pretty exciting. Additionally, we've got our combination therapy routes to commercialisation, where we'll be combining the drug with the other active pharmaceuticals. And this is actually faster to get through the process as opposed to if you were to be developing a brand new drug from scratch. Oops, that's not working. Here we are. Comparing us to our peers is very difficult because no one else is actually developing either a CBD. Everyone else is developing a CBD or a THC product, whereas we are the only ones developing a minor cannabinoid-rich product, whole plant. And so this is why it's quite difficult to compare us to peers. However, I can say that IHL up here in Canex is probably the most similar to us in the fact that they are developing combination therapy works, albeit with CBD alone, but they are combining their product with other active pharmaceuticals. And they've got a rather large market cap, as you can see. Our development pathway and milestones upcoming. We are very imminently about to release the phase 1/2 efficacy results. They'll be out at the end of this month. And that is very exciting. We've got a lot riding on that. And I look forward to sharing those results with you. Then we'll be commencing our phase 2/3 study in Q3 this year. And we're off to the US to meet with the FDA to do our pre-IND meeting, which will be great. Licensing and commercialisation discussions will continue, and we'll be submitting our drug master file. Then next year, we've got other plans to do additional trials in cerebral palsy. We've got our phase 2/3 study completing. We've got FDA submission. And lastly, we'll be starting a US-based trial in autism as well. So lots on the agenda. So to summarise why to invest in NTI, well, I can tell you we've got a great board, good management team. We've got an excellent product that's very unique, and we've got a clear pathway to commercialisation. We've got significant near-term and long-term milestones, lots of news flow, and that brings me to the conclusion of the presentation. So thank you for listening to me, and I look forward to seeing you out there.
Thank you very much, Doctor. Really interesting presentation. Really interesting stuff and a great Great. Do you know what? I was so impressed last time, well, I can say this now because the camera's gone. I was so impressed last time, went home, told my family about it. My 17-year-old actually invested in it. So I've got a 17-year-old who was so impressed and interested in what you were doing. He thought, I'm going to invest in that, Mum. So yeah, it's great to see how the trials are going anyway. So well done. And I know you'll be speaking to Dr. and Brian's out the back there as well. Stick your hand up, Brian. So go and have a chat with Brian as well. He's one of the nation's leading biotech fellows. And if what he doesn't know is not worth knowing. So if he's involved in this, it's got to be good. Right, our last presentation before lunch, unfortunately, due to some constraints that we had absolutely no power of, our last presenter is unable to be with us live. He is, however, joining us online, so I'm hoping that's all lined up the back there. Shane, I'm just looking to you for guidance. Yes, all good. All right, so he's got a technical guide. I'll introduce first. Brett Lynch is next to take the stage here for us today. Brett is the Managing Director, Chief Executive Officer for Sayona Mining. Now, they are powering the world's clean energy revolution with their leading lithium resource, which is based in North America. Home here in Western Australia, the company holds a large tenement portfolio in the Pilbara region perspective for gold and also for lithium. As I said, Brett Lynch can't be here with us in person, but we'll see if with the marvels of modern technology, he is indeed ready to join us. Brett, hello and welcome.
Hello everyone, and thanks very much for the opportunity to meet with you today and discuss Sayona. Apologies that I can't be there in person. I'm actually up in Quebec as we're very focused and busy looking to deliver our NAL operation back into production in early 2023. But today, first, by way of disclaimer, I'd like to move on and perhaps give you the start with the highlights of our asset base and operations in Quebec. Next. In Quebec, we have been building and have built a significant large resource base spodumene to be able to supply the North American market over the next 30 years. Today, we have over 100 million tonnes of resource, and that makes us the largest single spodumene resource holder in North America. But that's an important asset to build upon for the future. Certainly something that the large-scale battery and car manufacturers in the North American markets are looking for from a supplier. In addition to that, we've also been able to acquire a previously operating mine and concentrator and carbon plant facility called North American Lithium. We'll talk a bit more about that later. But that actually gives us a lot of advantage in terms of speed to market and a low capital cost base. The next element of our business model is to take that resource base, turn it into production, and then also move downstream such that by later in this decade, we will be one of the leading, fully integrated, self-secured supply centres in North America for hydroxide and or carbon. And lastly, but not least, is our position in Quebec. Quebec has unique heavy and sustainable advantages in supplying the North American market. Its geopolitical security with the US, its location and proximity to the key battery and car manufacturers in North America, its infrastructure and its access to high-quality trained talented labour, and finally, its access and ability to provide hydroelectricity, the cleanest and lowest carbon cost energy in North America. All of that combined, I think, gives us confidence we have a very good chance of success and to becoming a leading supplier in the North American lithium and battery market. Next. In terms of our portfolio, the assets we have are centred around two production hubs. The first is B2B, which is to the south in Quebec province. It's centred around North American lithium as a production centre and will be fed also by two satellite deposits we own, Godolphin and TeQ. This production centre is managed and owned with our joint venture partner in terms of This is centred on a prospect and deposit we acquired late last year called Mumley. We're developing that aggressively to extend its resource base, its capacity to the production capacity. And we're in partnership with the Quebec government through its investment fund, Investment Quebec. It's a 60-40 joint venture between the two of us. By way, because we're in Australia today and you're in Australia today, we also have very interesting prospects in Western Australia, both gold and lithium in Pilbara. In Pilbara, in terms of lithium, our partner, Morale, we have an earning arrangement with them, and they're busy exploring before we further drilling there. And we've just completed our first series of exploration target drilling in our gold prospects there. Next. Our business model is really driven on a series of calculated little steps, but quickly, as I'd say. It's all about ensuring that we deliver in full on time with low risk in terms of execution and to our shareholders. So this series of steps starting in 2022 build towards that goal of becoming the largest lithium supplier in North America, where eventually by 2027 we expect to have up to 60,000 tonnes of hydroxide and or carbonate production. Starting in 2022, it's about getting NAL back into production. So that's a major project for us currently. We have over 100 people on site today, ensuring that that construction, refurbishment is all heading according to plan and on schedule. We most recently raised sufficient funds to ensure that we now are fully funded through to completion of that restart program in Q1 2023. In addition to that, in 2022, we're now also expanding aggressively the resource base for our northern hub. So today we have 3 drills operating in Mobile on site, and in the near future we hope to issue the results, the final results of the drilling program we did just a few months ago. In terms of expansion of the resource base. That sets us up well then for the next couple of years in 23-24, where we will be focusing on maximising the production at our Abitibi hub at NAL in terms of tonnage, grade, and delivered costs and profitability and free cash flow. NAL at that point will be the first and the only in 2023 spodumene producer locally in North America. A unique and wonderful opportunity for us to maximise. The step that will be following that in 2023 will be evaluation of how we will go downstream. We have several options, one of them including the completion of the carbonate that's already been partially constructed on site. It's very interesting, and we intend to evaluate that in the near future so we're ready to make the investment decisions as and when they're required and ready in early 2023. In the north, off the back of an increased resource base, we intend to undertake a DFS, ready to have the ability to make the right commercial decisions on investments around a concentrator in that 23-24 period. The next step in 25, as we're targeting, will be to fully integrate the Abitibi hub such that it's actually producing lithium carbonate or hydroxide in the Abitibi region. In addition to that, we'll be getting the northern hub into production in terms of spodumene. And then the final step in 2027 thereabouts is having 2 fully integrated production hubs, one in the south and then Moglan or the northern hub, which has the capacity expected of at least 30,000 tonnes of hydroxide by that period. In those series of little but quick steps, we should be able to successfully move our capacity up to one of the leading suppliers in North America, and hopefully doing it with the lowest capital cost base and the most de-risk of projects in North America. Next. So here's an aerial sort of snapshot of how the hubs, align. One of the great advantages of having our business laid out this way with 2 production hubs, it gives us a range, I think, of benefits and sustainability that the end users we're talking with tell us they're looking for. It gives us scale, 60,000 tonnes. That's as large, if not larger, than any other current plans in North America. It gives us two sources, which gives us reliability of supply, certainly reliability of supply within Quebec, because again, at 60,000 tonnes, there won't be in this period anyone else with the resource base who can actually locally supply totally within North America, totally within Quebec, picking up all the benefits of supplying out of Quebec, including the lowest carbon footprint. This gives us a very long-term secure supply that I think the end users are certainly looking for. In addition to that, the 2 hubs have quite different commercial profiles. A B2B, because of how we were able to acquire NAL through administration and relatively cheaply, is a relatively low cost, low capex, and fast startup. I mean, the plant has already had $400 million spent in it. It has operated on and off for the last 8 years. And so it means it has actually got most of the permits already approved. So we can move into production there much quicker, much cheaper, and get into free cash flow much faster. That's a great benefit of the B2B hub. Complementing that is the Northern Hub, which by anyone's standards is, in terms of a resource, world-class. It has phenomenal grades of 1.5% thereabouts, very low stripping ratios, 2.9 to 1. And it seems at this stage from our recent exploration, it is very amenable to expanding significantly its resource base to justify and to be able to underwrite production capacities of 30 or even more, 30,000 tonnes of hydroxide for the next 30 years. So adding those 2 together, it gives us, again, a nice business complement of those 2 business units. This, when we put that together, I think is why we're very comfortable and confident that the market will respond well in terms of supply and contracts and deliveries for that very reliable, robust supply model. Next. Honing in on the project, as I said, is priority number 1 for us at the moment, is NAL. NAL we acquired in August 2021. We acquired that out of administration, and we were, I think, very fortunate to have secured that before really lithium prices took off. And that's because it has already got a lot of the work completed. We just need to do a refurbishment of that site. It's about $100 million we'll spend in capital to bring that back into full production. And in addition to that, permits are in place. We still need to complete the reapproval or the revetting of some of those approvals, but that's well in place now. We have over 90% completed. And so things are on track in terms of a low scale, low risk, low cost turnaround refurbishment for the restart of NAL. That's been a really significant competitive advantage for us at this point where lithium is in such scarce supply. Next. The other key project we've got focused at the moment is Moblan. It is to the north, as I said. We acquired that project in October last year and immediately began an extensive drilling campaign. to expand the resource base there. We acquired Mogland with a 43-101 resource, slightly under 10 million tonnes. We intend to expand that through drilling and confirm that that's at least 25 million tonnes is our expectations. We're on track to doing that. And we, as I mentioned, have a significant drilling program underway at the moment to further develop the resource base there. We hope to have those results come Q4 this year. That will then allow us to move into preparing and evaluating the DFS for the appropriate scale, concentrate and commercial activities in terms of production on that side. Next. The NAL restart. This is in full steam ahead mode at the moment. As I'm on site, there's 100 people here between construction, engineering and operations team is pretty much already fully recruited and on board. The permits, we have, as I mentioned, over 90% of our permits now reconfirmed, and that's looking on track to ensure we can start up on time in Q1 next year. So everything's moving reasonably well in terms of supply. We pre-ordered a lot of the long lead item equipment late last year. I think that was a wise move because now most of that is actually on its way or has already been delivered and is actually sitting in that big green shed that you see ready to be installed. Hopefully we've missed some of the, not insignificant supply chain issues that will impact significantly all the new projects that will be commencing on a large scale in 2023. Next. In terms of time, we intend to have in Q1 next year, 2023, NAL restarted and producing at 6% spodumene production. We will start that at lower than full capacity levels to ensure we will ensure we ramp up as quickly as possible once we've proven that we can deliver and produce at that level. We are already expecting pre-commissioning to start even at the end of this year. So the team is moving well and quickly. They've been in place for getting on to a year now on evaluating and developing this project. So we're really, I think, in full flight, and it's pretty on track, and that's certainly pleasing from my perspective. The next phase we mentioned before is about looking where next. Once we've demonstrated that we can produce successfully 6% spodumene in 2023, the next key goal for us on those steps is to move downstream, and we are in the middle of evaluating the various options that will come into focus and will be decided upon in the new year. Again, that will be another challenging but a very exciting and hopefully very profitable step for Sayona, because as I mentioned before, one of the unique attributes of the NAL business base was that it is one of the very few plants, certainly the only one in North America at the moment, that is fully integrated on site in terms of a mine next to a concentrator, next to a carbonate plant. And that gives unique benefits in terms of delivered cost as well as carbon footprint, because the NAL facility is pretty much fully plumbed with hydroelectricity. So we're looking to take the maximum advantage of that opportunity, both in terms of speed, low cost, and low carbon footprint. Next. So to summarise, I think Sayona has really built quickly a very significant and strategic footprint in Quebec. We've done that as the first step of building a resource base, over 100 million tonnes. I expect that will be significantly more by the end of this year as well, as we develop Moberland. That will then allow us to differentiate ourselves, to provide, I think, up to a 30-year offering to the large battery and car manufacturers in North America who are very much seeking long-term secure supply. And that resource base at 60,000 tonnes a year allows us 30-year life of mine capacity. So that is a very significant position we've established already. With NAL, we're able to basically fast track that into production. Again, a unique position we have in the market, and something obviously that the battery and car manufacturers in North America, who are so eager to secure supply from North America for production within North America, are very receptive to. The other part of our business plan is fully integration, because we do intend to be a fully integrated business supplying carbonates and hydroxides to the end users in North America. A very much a short supply chain, a very much supply chain based on reliability of supply, stability through Quebec, and also the carbon footprint being minimised through that unique access to hydroelectric energy in Quebec. So that, I think, brings it together in terms of our business plan, our assets, and our timelines over the next years. Thank you for the opportunity. I'll stay focused here. You stay tuned, and look forward to catching up again very soon. Thank you.
Thanks, Brett. All alone in his little hotel room over in Quebec, poor old Brett. Right, we've taken up some of your valuable lunchtime. We'll try and be back here in about 35 minutes. And if you're trying to figure out what to do, it's okay, you can keep moving, because I know you can all do two things at once, that's fine. But the last presentation of today, I think, is a doozy, because the fellow that's presenting it has just put himself $1 million worth of shares in the company that he's involved in. And I want to know why he thinks it was a valuable investment, and if there's anything in it for us.